All righty, Silver Doctors Live, Wednesday. It is the 18th day of the month of September. Excited to be back with you. My name is Mike, along with my co-host here, Mr. Paul Half Dollar. How you doing, Paul?
Doing good today, Mike. How you doing?
I'm doing excellent. And so let's, before we get too deep into today's discussion, let's make sure that everyone can hear us. And so trying to work on some back end things. So for those that are tuning in thus far, let us know how the audio sounds. So just give us a thumbs up if Paul and myself coming across clear to you guys. So Paul, share a couple thoughts with them so they can make sure they hear you.
Yeah, you're coming in clear to me. So I guess the main thing is how am I sounding to everybody? Because I think I sounded a little bit tinny. We've been working on the studio. I see loud and clear coming in,
All
so
right.
that's good.
So loud and clear is good. So they hear you, they hear me. Let's make it work. So with that being the case, welcome to this live stream Wednesday afternoon. A big day, a lot of stuff happening. And so we got some primary subject matter we're going to touch on. But as always, you guys are welcome to join us via the phone lines 567-336-0844, or there's a chat that's starting to show some activity in it, so you can join that as well by just typing at Silver Doctors, and it'll highlight something if you guys want to share a comment or a thought. And if we have any new viewers just taking time to spend with us this afternoon, let us know where you're watching from, and we'll acknowledge your presence this afternoon. So that being the case, let's keep it moving. So we got Corey from Germany. How you doing, Corey? We got Derek, we got Daniel, we got Brent. Who else we got? Just Us. We got Armed Resistance. So yeah, got a couple people tuning in. Low blood pressures here.
Someone said I always sound funny.
All right, man. So let's get into it right away. So Paul, go ahead and kick it off with us. What you have some things you want to cover first before anything else? So go ahead and open that up for us.
Well, there's two big topics for the day, so we can really decide. I don't know what you want to start with first, the Fed or the manipulation case.
They go hand in hand, so
It does
it's
go
all
hand in hand.
interconnected at the end of the day. So let's
The
go ahead.
the manipulation case is just amazing because, I haven't dug into it super deep as far as the very specifics, but other people are, and that's the great thing about the independent alternative media, right? Yesterday I was interviewing Bill Murphy, and he's completely excited about this. He's thinking that this is as big as Watergate, and that went all the way up to the top, right? And Nixon resigned over that.
Yeah.
So, when we're talking about a scandal, we're talking about a scandal of epic proportions. I actually think that one of these traitors will probably succumb to the same fate as Jeffrey Epstein personally. And we'll talk about that in just a second. Here's why, right?
Yeah.
So we know that it's two current traders and one prior trader who's been charged with this criminal racketeering by the DOJ in this indictment, right?
Yeah.
Now,
Yeah.
and they sat on it for 5 years and they did nothing. And then after 5 years, they abruptly closed the case and said, well, there's nothing really that we can do here. Now, the interesting thing about that, which Craig Hemke wrote about, which we have featured on Silver Doctors today, is the person who led that investigation from this.
All right. So for some reason, all right. So as you were talking, I was looking at the chat, and it said the audio said lost sound, and it says good now.
Oh,
So once again, apart from everything being good on our end, so for a second there, it looks like you went out, so it says okay now, and we've done nothing behind the scenes. So it's some things that usually we can't control. That everything's going good now, but you never know. But if you don't mind, you can reiterate some of those same thoughts you're sharing, because people can obviously hear us now for whatever reason they couldn't hear us before. But go ahead. I'm sorry about that.
okay. I want to make sure that are they still hearing us? Okay, I guess.
Yeah. So everything's good. Okay, sounds good. So I'm not sure what happened there, but I didn't touch anything. Go ahead. Go ahead.
Anyway, so one of the traders, the head of J.P. Morgan's trading desk, right? He's one of these guys that are charged. Now, after 5 years of investigation from the CFTC, the person who led that investigation,
Mm-hmm.
like abruptly quit like the week after they closed the investigation and said, there's nothing to do here.
Mm-hmm.
And, you know, we talk about this revolving door between Wall Street and Washington all the time, right?
Yeah, yeah.
And so this guy who head up the investigation, and I can't remember what his name is, like something with like, I could see it in this Craig Hemke one here. His name is Mester. So this guy Mester, David Mester, was the lead of the enforcement division of the CFTC.
Mm-hmm.
He left the week after they closed the silver manipulation investigation after 5 years and said, there's nothing we can do here. He went to a law firm, and now he's the same guy that's representing the guy who was charged with this, who was the head of the precious metals trading desk.
Yeah.
So think about this for a second, right? You've got the person who's
mm-hmm.
This guy who's getting charged, he's also on the board of directors of the LBMA. That came out of Ronan Manley, out of the other side of the pond there. So, you know, just the point is there's just, you know, circular, we talk about this revolving door all the time between politics and Wall Street. And we see it now.
Okay. All right. So, yeah. So keep talking. And so what I realized, when I split screens, and so when I split screens, that's when the audio goes out. And so, okay, so I gotta be careful of that because that's an additional feature that I didn't add to that other screen. So we're good. So I mean, I won't be able to go to the other screen right now without adjusting that. So we're good to go. So people, I apologize for that. That was an error on my part because there's a lot of stuff you have to add in back here. I forgot to do that extra page, but we're good to go. So, so ultimately, with this case now being a mainstream story, what are you anticipating? How do you think this is going to play out? Will more names be dropped? Will it go up to the higher ups? And will we see eventually Jamie Dimon, you know, taking the fall? Because as of now, too big to fail banks are too big to jail. So that's why I'm not really overly excited about this news, even though it could be good for the metal's price. But once again, I'm not hanging my hat on that. So
I'm not overly excited about it at all. I think that the timing in this is absolutely working in the deep state globalists' favor because, you know, it's funny, they waited until Monday to bring this out, right? We're on the brink of war with Iran on Monday. And then also knowing that the FOMC meeting is today and they dropped this stuff on Monday, it's like, come on, you know? So obviously they want to bury this. They want to sweep this under the rug. They don't want to give this any time of day. And already even the independent media is not even really covering it anymore. Zero Hedge isn't saying a word about it. I have my thoughts about that. But, you know, the bottom line is it's that revolving door, and just in case my sound got cut out when I was talking about this earlier, but it's that revolving door between Washington and Wall Street, and that's what we see here. The lawyer who headed up the investigation for 5 years at the CFTC went to go work for a law firm, and that same lawyer is now representing one of the 3 defendants in this case, the head of the precious metals trading desk at JP Morgan, who was also on the board of directors at the LBMA. So it's just, you know, this nasty full circle ring of corruption that's going on there. Yeah. So I really think that they're trying to sweep this under the rug. If it is as game changing, and if it is as big of a scandal as like Bill Murphy is claiming, that's why I think that this Michael Nowak guy is going to get Jeffrey Epstein, because he's the one that knows more than anybody else in this. Because why is the ex-head of the 5-year investigation representing him and not the other ones? You know what I'm saying? Right. So
right.
So I don't. It's just like, do you remember, like, I guess it was last year at this point now, or maybe it was at the beginning of this year, when they were saying like gold was going to become tier 1 asset again on Basel III, and everybody's like, oh, this is going to be. No, I mean, it really wasn't great for gold. So it's just the same thing with this. I am taking the skeptical look at it now, especially with what we're learning about these different interconnections and just these rings of corruption. So, you know, it's starting to smell already, and it hasn't even started.
Right. And it's, as you mentioned, it's interesting how all these things are occurring, but yet, to me, it's just reaffirming how many cracks in the system are starting to leak. And so I would imagine, you know, if this is all a coordinated event of events occurring, because we got the whole repo situation. So, you know, I mentioned a couple weeks ago how quantitative easing started in a form because of the additional Treasury purchase directly by the Fed to the tune of about $14 billion. Now we have just a very borrowing cost within a day spiking, and them offering up to $75 billion in a 24-hour period for lending purposes. Is signs that, I mean, like, once you go beyond a day, how problematic can it be with liquidity if people are experiencing, tight crunches within a 24-hour period? So,
yeah, that was just one day. Are they going to do 75 billion every single day now?
Yeah. So I'm thinking, like, so say for example, because I ran some articles just recently before we went on, and they were saying
like 53 was the total.
So 53 yesterday, but they were willing to go up to 75 billion if need be. Yesterday only demanded was 53, but today thus far I heard that the initial demand, I think I saw something about 85 billion. So it exceeded what they were willing to actually put out there in the form of a lending opportunity. So and then at the end of the day, I think on Zero Hedge they mentioned something about possibly needing 400 billion, I think, for the month or something like that to kind of meet demand. So I'm thinking, like, damn, like, how long can this continue on before something literally, gives?
Did you see the press? Well, I mean, it was a little press release from the New York Fed, and I'm going to read it right now because I got to find it though. But I'm going to read it right now because I think that it's important because it proves a point, and it just goes off on this pet peeve of mine that I just have to say for 1 second here, because let me see here if I've got it. I think I put it in my article today. Well, maybe I didn't. But anyway, so the New York Fed basically said that we're engaging in this repo operation today, September 17th. So this was yesterday, right? And then the very last thing that it said was in order to help maintain the Fed funds rate at the target 2 to 2.25%, right? So here's the thing that just gets me, so everybody's all over Twitter talking about, the Fed should do this, the Fed should do that. What the Fed is saying is, hey, we've got to intervene and manipulate these markets right now because there's an emergency. So let's go in there and suppress interest rates, and everybody's just cool with this. And everybody's just armchair quarterbacking this like, the Fed should do a little more. The Fed should do a little less. And it's like, they're enabling this to go on. So it just drives me crazy that, the market wants to do something else, right? The market wants interest rates to go up. The Fed does not want that to happen. So they have to. So when I say these markets are manipulated 24/7 and they're manipulated more than they are not manipulated, well, here's your proof right here. I mean, it's just, simple. As soon as something happens, the Fed is quick to jump in the markets and try and make it happen. But they're losing control because the Fed funds rate went actually to 2.3 this morning. Did you see that?
I did not. No, I did not.
Yeah. So they weren't able to contain it as much overnight and as they thought they were. And instead of that, because it wasn't like 2.125 or 2.10, but they lost control of it and it got to 2.3 this morning. And then this morning when I looked up and looked at the probability for the rate hike, it was like 50-50 now. So now it's not even like 90% that they're going to cut, for the rate cut. So now, there's like a 55 chance that they will cut, 45 chance that they won't.
Interesting. So yeah, I didn't see that. So definitely that quarter drop that's expected today might be adjusted. So look like we have a call. Let's find out if we can get somebody on air and go from there. So hello, caller. What's your name? Where you calling from?
This is Pressure from Corpus Christi, Texas. How you guys doing today?
I'm doing good, my friend. How are you doing? What thoughts do you have to share with us today?
I just wanted to share something with you guys. I think all of this going on, it's a controlled demolition. You got the banks on the brink of bankruptcy. You got stock market. It's so high, How high can you get, before you overdose? and the dollar is just gonna crash. I think it's a world controlled demolition. Now they're trying to set up the banks and they're trying to set up the Fed to take the fall. I don't know who's going to take the blame, but that's what I think. What do you guys think about that?
Controlled demolition, yeah. And so everything ultimately will boil back down to the currency. So they're literally like right now we're in a comatose state, and they're trying to inject more monetization of everything. They're going to monetize everything to keep this thing going. So they're going to lose control of this demolition eventually. So they're going to lose control of it, and so. Yeah, the toolkit situation, like this repo situation, as I mentioned before, is another option out the toolkit of trying to inject liquidity within a 24-hour period. I personally, apart from this happening, was not really aware of the repo markets in this nature, but now I'm learning something different now. So this is a new tool that I'm familiar with. So yeah, and don't tell them what else is coming.
Yeah, and so basically the Fed has been engaged in this
whole repo thing, just like you. I had no idea. banks borrowing overnight, and
Yeah.
then they pay it back. And what's going on? This is craziness.
Yeah. Hey, man, it is what it is. Low blood pressure. Appreciate you calling, my friend.
All right. Thanks a lot. Have a great day, guys.
Yeah, you be good. All right, go ahead.
I mean, that repo market is just standard procedure, right?
Yeah.
But the problem is that the liquidity is drying up to get funding at the rates that they're trying to keep them at. That's the problem that they're having.
Yeah.
Which is why the Fed is pumping that money in there to keep the rates down, or else rates are just going to keep on skyrocketing. But yes, and so, really, we've been in unofficial QE since, at least a month now.
Mm-hmm.
Right, since at least a month, starting with what you first tipped me off about that I didn't know about until we talked about on the show once with the bond purchases.
Yeah.
And now the repo market.
Yeah, what's next? So we're gonna find out, unfortunately. And that's the thing, like we're just in the middle of September, and so we still got a couple more weeks in this month, and then we into October. That's gonna be a whole nother month of issues, because not to jump the gun too soon, but with what's happening today, it looks like officially Saudi Arabia and the U.S. have officially confirmed that Iran is the ones behind it, even though the Yemenis, the Houthis, have said they did it, but yet it looks like that's not good enough. So God forbid, man, we might end up being in some type of war within the next couple of hours, nevertheless a day, to where, yeah.
And the problem is, the deep state is having a hard time controlling the narrative because, like, remember when we were picking out like all the stuff that was wrong with like that Guido uprising in Venezuela and the bridge attack and all this and all that. It's like the independent media, the internet is a curse to them as much as it is a blessing, because all this stuff, like all these false flags and all this stuff that's going on, can just be picked apart within 48 hours by the independent media. So, it's hard for them to be doing these things, which is why they're just going to get even more desperate for something. And when they're lashing out in desperation, that's even the worst kind of lashing out than if they could actually control the narrative.
Yeah. And so I'm looking at the comments as you were speaking about this whole narrative aspect, and it says we got Chapita Master Video says BBC said Yemen did it, and then it says US said Iran did it. He says I say Saudi Arabia did it to themselves because they need oil prices to rise above $82 a barrel. So that's kind of like, I'm feeling you on that one.
Yeah. I mean, I think it was a false flag one way or another. I
100%.
investigated it too much.
100%. And then what's even more interesting, I think it was 10 days ago, or it's currently in process, China and Iran have a $400 billion deal in the works. So right now, as we speak, they're either something was signed or something is about to be signed to basically provide China with all the oil they need in this energy deal. And all of a sudden, somebody decides to go attack Saudi Arabia's oil line, knowing dang well that the petrodollar system is based upon protecting that country in particular. And then the U.S. jumps right in right away. I know who did it. Yeah, you do. Okay.
And the price of oil is back down to like $58 a barrel now, too. So it's just amazing, like all of a sudden there's stuff, oh, no, the oil market's fine. We're going to be back up in production in no time.
Yeah, so that must have been a lot of damage if you were up and running that quick. So we got M. Harmon says, Mike and Paul, $50. Big shout out from Allentown, Pennsylvania. How you doing, my friend? So, as always, we in the chat. So if you guys have thoughts or questions, make sure you highlight at Rethinking the Dollar so it stands out. And then if you guys have some thoughts you want to share directly, feel free to call in 567-336-0844, and you can have your voice heard. And so let's keep it moving. So, what are we expecting today? So with this whole repo situation, do you think that's going to really impact the expected Fed cut? Because it sounds like, if they can't control the Fed funds rate the way they want to, they may have to try to get ahead of the curve as President Trump wants. That means, do you see more than a quarter point today, or what? What are you anticipating?
I'm anticipating a quarter point, and I'm anticipating that because the yield and for a few reasons. In part because the yield on the 10-year is 1.75. So if they hold today, they're still going to be inverted with the 10-year. Even though people don't look at that as a spread, I just like to talk about the 10-year because it's, to me, I think the easiest bond that people can relate with. people can call it like the benchmark for the U.S. Treasury. On top of that, Jerome Powell, I don't remember if it was in Zurich, but I think it was in Zurich where he said a 25 basis point cut would be appropriate in September. So, he's already said that 25 basis points seems appropriate.
Yeah.
And, with all of this shock stuff that's going on as it is, it seems unlikely that they're going to shock the markets by not cutting today, right? I mean, because that's all he was boasting about. Their three tools are interest rate suppression, essentially, quantitative easing, and forward guidance. So the forward guidance was, hey, we're going to cut by 25 basis points in September. So here we are, right? So if we take that for face value, then they will be cutting 25 basis points.
Yeah, so we do have a question here from Sean. It says, do you think oil will get to above the 2007 high before the collapse?
That's a good question. I think it will. But the high was like was it $140?
I'm not even sure. I want to go try to find out, but I'm afraid to switch my screen.
I can find out right now. I got my chart pulled up. Oh, I'm sorry. Wait, hold on. No,
and then also, while you're doing that, we got a call, so let's find out, what is going on here.
Okay.
Hello, caller. What's your name? Where you calling from?
My name is Jim. I'm giving you a call from Brooklyn Park, Minnesota. How are you guys doing?
I'm doing good. What's your name one more time?
Jim.
Jim, how you doing, Jim? What's your thoughts or comments for this afternoon?
Well, I've got a couple of questions for you guys.
All right, go ahead, lay it out.
One would be directed to both of you,
Mm-hmm.
and that is, given the fact that perhaps someone would have a position in physical precious metal, what do both of you think of having shares of mining stocks? That would be my first question.
Okay.
And then second of all, second question would probably be directed to Paul. And that is, given the fact that he believes President Trump is going to be a fall guy, and I think he also believes that President Trump is part of the deep state, does he believe that President Trump is going into this knowingly that he's going to be the fall guy to take the blame when the economy tanks?
Okay, two good questions there. So I appreciate you. We'll answer the call offline. Thanks for calling in, my friend. All right. Yep. Jim, good questions there from Jim. So the first question, Paul, you want to touch on those, and I'll add in, and then the second question was directed to you.
Yeah, I do think that he's in on it, and I do think that he's going into it willingly. Mm-hmm. And I've shown this in different ways, and let's talk about the witch hunt for a second, right? Mm-hmm. This went on for years. And throughout this whole process, President Trump was tweeting, this is costing billions of dollars. This is taking up so much American resources. He literally said, this is ruining lives. I can search that Twitter archive and see where he said that this is ruining lives. Then after they released that Mueller report, he came out with a tweet and said, you see, there was nothing. I could have ended this any time I wanted to. Well, if months and months and months before that, he said, this is destroying lives and costing billions and billions of dollars. It's like, come on, he's in on it. He's in on it. Then secondly, there's the WWE, there's the Hollywood with Mnuchin, there's the, he is an actor, right? He is a rock star. Why are his things so full of people? Because people like going to rock concerts, right? Me and you were like the tail end of that big whole concert scene, where they were having like some pretty crazy concerts in the 90s there, in the early 90s. Mm-hmm. But, that's what this is about, So I do think he's playing his role and following his script in there. And I think what's coming after, and part of that is because, if he wants to do the right thing, he could have done the right thing already, right? And then the other thing is, we don't need to wait any longer to do the right thing, right? Because until we can fix our economy, until we can fix Washington, because that's my point, right? Mm-hmm. My whole point about all of this is that it is impossible to make America great again without first draining the swamp. That's it. You absolutely have to drain the swamp first before you can make America great.
Now watch this. Draining the swamp is a great PR word that was given to us during the campaign process. But what is the swamp? Like, first you got to define the swamp, because once again, we got a lot of words for the powers that be. We got the deep state, we got the establishment, we got the swamp, we got the elites. That's 4 categories right there. who are those people? So what enterprises what needs to be exposed? And I got a name that I want to call out, but I'm not going to say it because I know the video, the internet's going to probably mess up if I say it. So I'm not going to say it, but it's a famous family that is the founders of the central banking model. You guys know who they are. I think the American public or the citizenry of the planet, all couple billion of us, should all start calling out the culprits behind this current banking model. What do you guys agree or disagree? Let me know.
Yeah, those are good points. And, yes, to put the names on it, we're basically talking about the unelected of, yes, there are, probably, I don't know, maybe 100 different families that are controlling all this stemming from the higher power structures. But
there's one family that we know about that's been doing it for centuries that I know about. And I'm sure they got some counterpart, they got some buddies, whatever. But there's one name that's famous for several hundred years, Paul. You know what I'm talking about. Don't say
I know what you're talking about.
All right, go ahead.
But they're not the only ones.
They're
one of them.
Yeah.
They're one of them, but they're not the only ones. But, so then you go down here to the United States. Well, who exactly is the swamp? It's your unelected, corrupt, right? So when I don't like calling them elite because elite has something grandiose about it. Yeah. Like when they put Powell's head photoshopped on Superman. He's not Superman. They should Photoshop his head on the devil because that's what he is. He's a demon. Mm-hmm. But, when we're talking about the deep state, right, we're talking about the corrupt people in Washington that are influencing business, politics, the economy, all these things, right? So that's what we're talking about when we're talking about the deep state here. And, they're unelected. And if they are elected, then the elections were stolen. That's another thing, right? This whole illegal immigrants voting. Well, that's only one aspect of stealing an election, right? There's ballot stuffing that's flat out rigging it so that when you program the software for every one vote that's tallied for this person, 2 votes gets tallied for that. So there's just a million ways that the people are selected and not elected, right? Because it doesn't matter who votes and what status they are. What matters is who's counting those votes. So I'm just going around on a tangent here, Mike.
So I'm hearing you and I'm watching people, share their thoughts as to who I'm referring to. So a lot of people know. The people who are aware and awake, they know. And those happen to be the people who are financially preparing themselves as well as socially and economically, everywhere they can, preparation-wise. Those are the people that are in tune. And so as I think about that more, until we can actually come to the foundational pieces of being able to address the people, the entities, the families, the companies, the corporations that are behind all this, which will never happen because they own mainstream news. And so I think it's six or so corporations own the entire media structure. And so until we can call out those people, we don't have the mechanism to get it out to the public in mass numbers because it's going to be censored. You'll never hear Fox, CNN, CNBC mention anything about those particular individuals. So until the public knows about those folks and actually are able to call out certain names and go appear certain places, the private estates and castles with picket signs saying we want our money back, that type of stuff.
You're picket signs. You're such a peaceful person, Mike.
Until we get some stuff like that where the average person knows who's responsible for dumbing down our kids, which is educational system, because they pay for the government, they hijacked everything. Until we get to that point, everything we talk about now it's all sound good, feel good, but I don't anticipate no real change, even in the midst of a collapse and a rebuild, because those same people, if we don't call them out, they're going to be the ones giving us the solutions to the problems that they cause. So
yes, exactly. And so where I think they lose control is I think it is a controlled demolition, but I think they lose control at some point in that demolition. And then what happens next, it depends if the, who I would call patriots can, restore, the country to how it's supposed to be.
Yeah.
But,
we'll see. But I don't want to be a pessimist.
And take it one step further. Yeah. Have you ever seen those videos where on the screen it'll show 20 different news and it's playing everybody's voice and they're reading the exact same thing, right? So it's today Christmas shoppers are bargaining in line for the newest Furby toy or whatever it is that they're saying. Yeah. But it's all the local news channels are all reading the exact same script, right? Yeah. So when you're talking about these media giants controlling everything, yes, this is why I cannot stand Hollywood at all. And I don't know why people watch Hollywood movies, because to me, it's just blatantly obvious. I mean, I literally can't stomach 2 minutes of any kind of movie. Yeah. Because, if there's only, how many movies are released a year? Maybe 50, probably 35, not many, right? I mean, maybe 100 max. Yeah. But here's the point. It is so easy right, to control just like 100 movies or 50 movies a year, and then make that your propagandist machine to influence the thinking of the public, then by even controlling all these different local media stations, feeding them the script from the top down.
Yeah.
If that even made sense.
It does. And so as you're talking, I caught a question here, and this ties into what we're talking about. So I got a comment, then I'm going to read this question. And so when you mentioned that particular video that shows news snippets of all the anchor men and women reading the same thing, I'm familiar with that, and I'll try to find it. Probably won't be able to find it and share it here, but I was thinking about moving forward. This is just my opinion, so please don't take this as like advice. This is just my opinion or my thoughts. It's going to be hard to you should probably take for a grain of salt everybody, newscasters that reads from teleprompters and financial advisors that tell you to ride the volatility in the markets. Like, those are two people that you might not want to just say take that as like true advice. And just that's my opinion there. Let me know if you agree. And then somebody brought up a letter or a name for a source that I haven't heard in a while, and they said, this is from Extend Services. It says Q said that the delay is needed to exhibit the CIA and other players, CIA to get, okay, good point, we took out the I, and other players to get them all reason to have just started the lawsuit. So Q, that QAnon situation, I kind of forgot all about that. What are your thoughts on that QAnon? Is that like, is that a reliable source?
I think it is a psyop and a guerrilla marketing campaign for Trump 2020. And I say that because, they give you a lot of good nuggets, but on some issues they do not budge and they toe the deep state line. Point proven, they always come out with that never forget for what.
Yeah.
You know what I mean? So they're towing the official story on that, right? So that's the dead giveaway number one. And then also the whole thing about the moon landing, right? So they probably believe everything about the JFK conspiracy too that the government's told us as well. So I don't know. I think QAnon is a psyop, and I think that it is a great guerrilla marketing strategy for Trump 2020.
Yeah. Okay. So I like that. I like how you going with that one. What else you got here? So let's get back to the chat. Any thoughts out there? I see some more people talking.
I haven't followed the Q thing in a long time either.
I've been so caught up and distracted about events that's starting to boil up above the surface. And so so I want to comment on my interview with Leo Gantz. And so I was reading some of the comments from that interview, and a lot of people are anti-Leo or whatever. They just don't like his particular message because he's optimistic because he's a businessman and he has a strategy for everything he suggests and recommend. And so his approach to the markets is a lot different because he was saying that the economy is doing good in a sense, and he listed a couple things that describe how he sees it as doing good. But he then mentions from a sovereign governmental fiscal standpoint, it's really, really bad. So all in all, it's going to get worse. But his viewpoint is as a businessman. And one thing he kept pointing out, and I've talked to him before, is that the debt. We're in a debt-based monetary system. Debt is a problem. So in a sense, those that are able to take advantage of debt and use it to their advantage, they can have a good economy. Because if you can borrow at these type of rates, which are going to go lower, and turn that debt into a productive asset for you, your personal economy will be doing pretty good. In a sense, it'll give you a little leeway to then buy other tangible assets, and you can get your weight up even more, and then get ready to exit out. And so I wanted to just share my thoughts on that because a lot of people are like, I don't like him. But he kicks a lot of good knowledge that's applicable to our lives that people can use if they, decide to do a little more research and, try to implement one or two of his strategies because, it appears to be working pretty good for him. So, but yeah.
Yeah, I mean, it was hard to listen to. I'm going to put that out right now. It was hard. But, I mean, I like having these kind of people on, though. Even Harry Dent, when I interviewed him, because people were like, oh, you guys are just silver pumpers and this and that. And we're not, right? We were trying to just get everybody's opinion and trying to figure out what's going on in the world, right? Because we're not going to get it in the mainstream. So, I mean, I really appreciate you sitting down with Leor and talking to him about that, right? But like some of the things, it's just like, when he's talking about the S&P performance, it's like, well, dial that back a bit, right? I mean, let's talk about the Dow, right, which is also an index.
Yeah.
How many companies are still in the Dow that were in the Dow when it was started? None, right? None. GE was the last one, and they're not in it anymore. So, here's the thing about that, right? There's so much rollover into these companies. The only way that it's outperforming is if you are able to get in and get out of these positions right before companies get delisted and, all this other stuff, right? So,
no, So with that same thought there, that's very true. And so that right there plays against the narrative that a lot of financial advisors, I believe, is still sharing the idea of buy and hold. Because I think with this current monetary policy that we're being exposed to, it really takes away the practical common sense nature of investing for the long run. Nowadays, unless you know what you're doing, and this goes into Jim's question who called in asking about the mining shares or whatnot. That was the first question. And so unless you know what you're doing, you stand to take on a lot of risk, because the idea of buying and holding is not sound advice to me, in my personal opinion, anymore, because of the things you're mentioning of companies coming in, coming out, corporate buy. They're just pumping up their own share prices for the sake of profiting themselves first. They're not thinking about the consumer, nevertheless the company 10, 20, 30 years from now, for them to even be listed on the Dow or S&P, anything like that. Everybody's trying to get as much as they can out of the system now. And I shared an article, I think, a while ago about, is an article out of Canada. They were saying that a lot of U.S. corporations, the executives are already getting out. They're already dumping their shares and their portion of shares as a part of their portfolio package. And they threw out something like, 10 billion or some large amount per month they're dumping. So I'm thinking like the people who run the company, they're getting out, while the people who are investing out of their portfolios through just automatic deposits, they're just getting pumped in and suckered into the damn market. So, go ahead.
Great points. And, so don't let us forget about that mining stock question, because I do want to answer Jim's question about that. But, but just to go a little bit more on what you're saying as well, because this is also important too. And then on top of that, right, 1 ounce of gold is 1 ounce of gold is 1 ounce of gold, right? An ounce of gold, 999 fine, is the same in 2019 as it was in 1919, right?
Yeah.
So you can't really even compare the stock market to other things because it changes, right? So that ounce of gold is that same ounce of gold from 100 years ago, but the stock market makeup is totally different from the companies in those indexes than it was 100 years ago. So it's not even an apples to apples comparison. Yeah. And then just the fact that he was like, well, the stocks aren't really overvalued. I'm like, they're not. After 10-year ramp up bull market, stocks are not overvalued. I don't know. And then the whole housing thing, right? Like, so if mortgage rates go up, which technically we were on a tightening cycle and rates were supposed to go up, well, that means that housing prices have to come down, right? Because, if you can't afford the mortgage payment, well, then you have to buy less house, or the price on that house has to come down. Then there was the tax reform, right? Or the tax cut that President Trump passed, that consolidated the state and local tax deductions. So, and then it also raised the standard deductions. So people who itemize might not be itemizing anymore. Point is being that it's not such the tax incentive as it used to be to buy a house with debt. And then, we're at, 10 years of an artificially created bubble reflation, both in stocks and housing. And I don't know, it's like, going into that at this point is, I don't know. I don't think REITs are going to be where it's at for the next 10 years.
Yeah. Yeah. So I question, and me personally, just my personal opinion, I'm questioning anything like this, just the conventional financial and investing models that's been done throughout history, definitely the modern era of the buy and hold, and the idea of holding. Mining shares, for example. I'm not well versed in that sector to even be able to give advice or my opinion on it. I'm of the mindset that owning that from a appreciation of your portfolio in nominal terms will definitely go up. I think all mining stocks, like someone commented here, when QE gets started officially, all that cash is going to make its way back into the stocks equity market anyway. Therefore, gold and silver, I'm assuming, will go up not only from a metal standpoint as well as just the shares of those companies. So it's going to go up. But it's one of the things where the stock market in Venezuela is going up as well. But yet, once again, if the stock market it goes up, but it's denominated in a currency that's being devalued, you're going to have to take a little skin out of the game and buy something tangible and physical. So the shares, rattle shares up, but pull some out, and I'm not even a trader like that, but pull some out and then get your metals in your hand, because I think literally everything's going to boil down to metals versus monetary policy destruction. So which one is going to win? Metals,
Yes.
just because it's something that you can actually hold and tangible. And I'm real big on a scarcity nature. I think we're going to have a crunch pretty soon with just the ability to go out and actually acquire, even from a little retail shop or a coin shop. Like getting a small ounce of silver might one day be hard to do. So yeah, I'm tired of ranting.
Yes. No, those are all great points. Those are all great points. Let me fill in a couple of these gaps from before our comments. I was right on the 147. That was the top in oil. I think we're going to 100. I don't know if we're going to 147. And then just one more point about the Lear thing before I comment on the miners, because you make some great points there. The other thing that was hard to listen to is, he's like, well, inflation's 3%. It's like, come on, he's just like towing the official government statistic lines. So it's just like, I don't know.
He's smarter than that. He's smarter than that, but he's, as a businessman, as a business owner, he has a narrative and a facade he likes to keep for the public. So, he does him. But yet, regardless of whether or not I agree with him or not, he always shares a nugget or two that gets me to thinking about how to profit from this destruction that's underway. So he's very helpful in giving little tidbits on how you can take advantage of it. Because the people who are in the know, the people who have great financial savvy, they're excited about this crash that's coming. Like the Dave Ramsey, all those guys, Robert Kiyosaki, he's like, man, I can't wait. They wake up like, did it crash yet? I'm about to go out and buy an entire neighborhood without, so. And then somebody mentioned about cash, and so the something about what does it say? I commented back about cash. Not it says only risk is in cash right now, and that was by Albert S. And so my thought on that question or that comment is, cash in currencies outside the Federal Reserve note right now is very risky, because we see what's happening. The euro's going to have more issues. So all the currencies surrounding the United States of America, because of the Federal Reserve status, that Federal Reserve status gives us a little bit of leeway, gives us a little bit of a little wiggle room as everyone implodes around us, because it's going to be the last, one standing, and then it will have its day. But in the meantime, cash, you got Warren Buffett sitting on $120 billion. Warren Buffett, he know what he's about to buy. I think Warren Buffett's going to purchase a city, an entire metropolitan downtown area with that 120 when things go on sale. Anyway.
And then the other thing about real estate, right? You can't take it with you, right? And they're going to increase the taxes on it. Yeah. So, what happened when ancient Rome collapsed? People just walked away from the land, right? Because they couldn't afford the taxes. So, and on top of that, when I interviewed Egon a few weeks back, he was saying that the dollar could go first. So he had a contrarian opinion on that. I can't remember exactly why he said that, but I do remember specifically that he said that the dollar could actually be the first one to go, because I brought up the cleanest 30 shirt analogy. Yeah. So I don't think, is anybody really buying that inflation is 3%? I don't know. So there's just, I did listen to the interview, and it was a good interview, because the great thing about your back and forth with him was that it was getting people to think, which is what we need, right?
Yeah. Yeah, it gets us, keep us thinking, keep us on our toes.
Mm-hmm. But then when it comes to the miners, right? So, I would say that, the physical gold and silver, that's the core position, right? That's the core position. So, when people talk about diversifying, well, your core position is the gold and silver. If you want to diversify, that could be the miners, right? And that could be more of it depends how you want to do it, right? So, if I'm trading, I like the super leverage stuff. And I don't even like, just buying or sharing the super leverage stuff. I like options on the super leverage stuff, right? So I'm talking about options on JNUG. So stuff that's super, super risky, where you're either going to make a ton of money or you're going to lose it all. Yeah. So, it really depends. And then, the other thing that comes down to that is, it's hard to know when to get in and when to get out of these trades. But, if prices of gold and silver keep going up, then the prices of the miners will keep going up too, because obviously they're making more money because they're selling their product at a higher price. Yeah. So, yes, I would recommend some.
Yeah. I would say, for the biggest problem is, unless you're an active investor to where you personally have educated yourself and taken the initiative to actually get out there and take some loss and learn through that type of method, anything else, hearsay, she say type of investment advice or whatever models, is a risk. And so unless you actually know what you're doing and you've been in the markets for some time and able to profit off prior recessions and things like that, I'm skeptical on definitely sharing my opinions on things, because the majority of the population, the people who are holding up the people who own majority of the equities themselves, are the average person that are passive investors, and they just buy and hold because they're anticipating retiring off that stuff one day. And that's going to be a problem, because I don't really think it's going to be there the way they are told and taught and believe it's going to be there. So, yeah, just my 2 cents.
No, yeah, those are all great points. I think I would follow. I agree with you completely on that. So, and if it is there, it's not going to buy anything, because it's going to be worthless currency.
Yeah. Now here's a good question. Just popped up from Low Blood Pressure. It says, Paul, how many ounces of silver makes you comfortable to no longer need a 9 to 5 anymore? So I'm assuming that's on a daily. I'm assuming that's per day, or how many ounces would be ideal for you? I'm assuming.
I don't know. Because what you're talking about is how much do you need to survive? Do you need $5,000 a month? Do you need $10,000 a month? Do you need $15,000 a month? And then are you just going off of the capital gains that you have?
Yeah.
Because obviously you're not talking about an income stream there.
Yeah.
So I mean, it's just there's no real answer to that question, because it's going to vary for everybody.
Now here's another. So just hearing your explanation there, I'm thinking about how much would be needed from a 9 to 5. And of course, I remember listening to people about historical aspects, about a dime a day was the equivalent of a man's labor or whatever. So I'm thinking about now, getting back to the point where we're pricing, we're referring to pricing in the form of weight as opposed to actual dollar amount, i.e. a Federal Reserve amount. And so if we were to use that same question in how many ounces would it take for you per month or per week or per hour or whatever for your time at this current rate, then I would say I wouldn't mind, 1,000 ounces. 1,000 ounces a month would be nice for me of silver if that was an opportunity. And so universal basic income. I was watching an Andrew Yang interview just recently, and the guest brought up a question about Bitcoin, and he was like, "Oh yeah, he's didn't shoot it down, was excited about it in a sense, or portrayed that." And then she mentioned what about a universal Bitcoin income? And I started laughing, thinking about, man, like that would be something else. But I heard another commentator. The reason I mentioned that is because another commentator mentioned about the J.P. Morgan hoard of silver, and the executive order from years ago or a year ago that said that all assets can be confiscated in the midst of investigating, whatever the executive order was. And so how about worst case scenario, JP Morgan's hoard of how many millions or billions of ounces of silver is taken away from them, and they were talking about giving it out to the public in the form of an allowance or something of that nature, giving people physical silver.
That would be awesome, right? I mean, they would never do that, because then they'll be like, silver, what's this? Oh, this is money? Well, what is money? But yeah, that would be great.
All right, so we have a call. Let's see. Hello, caller. What's your name? Where you calling from?
Hey, my name's Mason, calling out from Texas.
Mason from Texas. How you doing, my friend? What's on your mind this afternoon?
Hey, man. Love the guys' work that you guys put now. Just had a question, or not really a question, but kind of get your guys' thought on this. Recently was watching the interview that Real Vision had with Scaramucci, and I kind of laughed when he was making the point for inflation, and he used the example of someone had, I think he said like $250,000 in debt and was making $50,000 a year, and he was trying to make the point that if we went the deflationary route, but basically he was making the argument for inflation at the rate that we have it now. With if you go into a deflationary cycle and say that guy that's making $50,000 with $250,000 worth of debt, his wages get shrunk down by 50%. I think was the example he was using, $25,000 a year. That inflation or that his debt still stays the same. So in turn, the deflationary trend would be worse off for your average guy out there. And I thought it was kind of funny because there's not a single mention of how with inflation, as we all know, that wage inflation is not on par with the actual, real inflation that we're seeing out there in terms of, consumer prices and whatnot. So I thought it was kind of a funny example that You know, he kind of just discredited any kind of, how deflation is, good for the average person, and just kind of threw it out there like, oh, no, it's not good because, your debt really goes up and your wages go down. I just thought that was kind of interesting. Didn't know what you guys thought, if you had heard anyone try to use that example or that, excuse, I would say, as a justification for inflation. So just try to get your guys' thoughts on that.
All right, I appreciate the call. Definitely. Paul, any thoughts on that?
Yeah, I mean, I don't know why they try and justify inflation or deflation, because technically it should be nothing. And, what we've seen over time is that over time there's a natural tendency for deflation, right? Because of increases in productivity and efficiency. So, and then on top of that, right? And I actually got Harry Dent to admit this, right? And I don't even know if people realize this or not, but like in a deflationary environment, if you're holding gold and silver, and this isn't really much wages, but this is just in general terms. If you're holding gold and silver are not going down in value as fast as other things are going down in value. So your actual purchasing power of gold and silver would increase, because your gold and silver are going to be those stores of value, and it's stored energy. As far as, justifying inflation because, you would have a deflation in wages. Yeah, that's a new one that I haven't heard before either myself.
Yeah.
You got thoughts on that?
No, so just off of hearing the word deflation, I'm thinking about if that $50,000 was his annual or income, whatever, and he had $250,000 worth of debt in a deflationary environment, it will probably be better for him because his consumer goods, his consumer expenditures have a greater chance of going down, freeing up a little bit of disposable income to be able to throw towards those debts that aren't changing whatsoever, because that $250,000 still due as is. But yet, if the cost of his food go down a little bit, all his housing bills go down, and he has an additional, 5-10% of purchasing power as far as him having disposable income, throw towards that debt, that'd be beneficial for him. So it would be better for a person to have a deflationary environment, which means they're getting a little bit more purchasing power out of the currency. But then we know that couldn't last long, because the system would completely seize up and come to a halt, because the system is based upon inflating.
Yes, and I'd like to make this point too. And you just made me think about something as well too. We've already had like no growth in real wages, and so my point is maybe wages actually don't deflate with the general inflation because they've already been deflated. And I really want to make that point. So if we want to take the call and then afterwards get back to it.
Yeah, we can. So hello, caller. What's your name? Where you calling from? Carlos from San Francisco. How you doing this afternoon, my friend? What's on your mind?
I'm doing great. My question has to do with the progressive era. I majored in history, and pretty fundamental idea within the history department in a small liberal art school in Los Angeles, that the progressive era, which gave right to a living wage, unions, government programs and institutions. Mainstream historians really believe and push the progressive era on students. And earlier, when I originally tuned into you guys were talking about education. What's your guys' thought on the progressive era? Because if you do a little more research and read some Hayek or some Rothbard, you realize that it wasn't as progressive as people think it was.
Good point there. We answered that. Paul, any thoughts on that?
No, I don't know enough about it to make a comment on it. So, what you're bringing up in this call is helping us to understand it as well. So that's why we like to call in feature.
Yeah.
So you're talking about like the era of like the New Deal and like the public works programs, and this is what you're talking about when you're referring to the progressive area?
Hello? I think it might be delayed. Yeah, did you hear Paul's question?
I'm having a kind of sort of use one ear for the TV and another for the phone, but
okay. So he didn't hear us.
But yeah. So
go ahead.
Basically, the progressive era was sort of started by Woodrow Wilson, the guy who sort of signed in the Federal Reserve, but then it was sort of continued on by FDR, and he sort of created government institutions like he instituted Social Security. He paved the way for unions, right?
Yeah.
And about how during this time, this was the same time when FDR attempted to confiscate gold from the American people. This is also the time during the Great Depression. So how progressive really was it? And again, there's a lot of students studying history who believe this was a time that was a great time, a time of progress, of modernity, of social evolution, right?
Yeah.
And, now a government will mandate a living wage for everyone.
Yeah.
Government's going to guarantee a security.
Right. Okay, so watch this. So with that information you shared, you've pretty much summed up and defined progressive movement, where big government. So you mentioned it originated from Woodrow Wilson. We all know he was the the president that sold out the United States people by instituting a privatization of our money supply. And then everything came after that was all in favor of the government to grow themselves by adding all these entities and these new deals and the Great Society and all these programs. That's the reason why the population is so dumbed down and overly indebted. It's because of the progressive movement. They've progressed right into our lives, and here we are now witnessing the collision of the fiscal policy problems that the progressive era has brought to us, along with the end of central banking the way that they've designed it with debt. So we got debt being borrowed and the central bank issuing it colliding right now with $244 trillion globally of debt. And so I think the progressive movement has proven to progress right to its own demise. And now it's transitioning to socialism or Marxism or whatever else they're going to roll out to us. And so those are my thoughts on that, just hearing you describe it from what you gathered through your educational process. So but you've done a good job of highlighting some of Rothbard's and point of view on it, and which is more less government, more sound money and free market economy type of policy. So
yeah, that would be my point too, because
both of my grandparents are now collecting their Social Security, and the system is already imploding. I mean, they thought they'd received a lot more than they actually are receiving, and we know that, and then on top of that, what they are receiving, buys them a lot less than it did 10 years ago. If they would have retired 10 years ago, it would have actually been, Social Security would have actually made a bit more sense for them. But
yeah.
So my greater point was to your guys' point about education. The progressive era is something that's really being, distorted in the small liberal arts universities across the country. And I think it's very funny that most history departments, if you do some research, you'll find that there's very little monetary historians in the departments. I think that if we're going to move forward as a country, we ought to, give a bit more time to people who study the history of money.
Right. Yeah, man. And it's going to boil. It won't come from privatized institutions such as our current college structure or higher learning structure. It's only going to come through self-education, by inquiring about things outside of your normal routine of life and going out and getting information for yourself. So you won't be taught how to disengage and to opt out of the system, from the system.
Yeah.
So, but I appreciate you calling, my friend. Thanks for sharing your thoughts. Appreciate you.
Thanks, guys.
All right.
Yeah, because what my thought would be on that, right? Less government.
Yeah.
That like government can't do anything right. So all they can do is get in the way or get out of the way. So
Create the
I would be
problems
against any revival of this progressive movement.
Yeah, create the problems and then hand us the solutions right after they create the problem. So,
and then create two more problems off of the solution.
Exactly. So watch this. We're coming down the home stretch, and we're approaching an hour. And there's still some more things I want to talk about, but it looks like we're ready to get to it because we've yet to go over an hour. So
yeah, I want to make. We have gone over an hour before, but hold on.
Okay.
I want to make one point about the wage deflation.
Yeah,
thing.
go ahead.
I would argue that wages have already deflated. So if there is a deflation, I'm not so sure that wages are going to deflate anymore, right? Mm-hmm. And when we talk about inflation, if they say there's going to be inflation, it's asset price inflation, right? Mm-hmm. So if there's going to be a deflation, it's going to be in assets. I don't think it's going to be in gold and silver because I think that those are not in bubbles and inflated like that. But my point is this. when I was in the early 1990s, Mike, I was slinging pizzas in the pizzerias, and I was getting $11 an hour in the early 1990s.
Yeah.
And I remember in like 2001, when I was saving up to buy my first house, I was looking for a part-time job. And this was when, my wife and I were like, we had a goal, right? We wanted to be into a house and we wanted to save up for a year. And we both wanted to work extra part-time jobs to save up for the down payment. And I was going around. One of the things I was like, well, great. I don't know how to make pizzas. I'm going to go get a job in a pizzeria. And I went around to the pizzerias and they were paying minimum wage, Mike. And it was like, I can't remember what it was at the time, right? I want to say it was like $5.25. It wasn't even like $7.15 or $7.50 or whatever it is now. Yeah. So, I went from making $11 an hour making pizzas in the early 1990s to in 2001, and this would actually have been 2003 because we bought our first house in 2004. I got married in 2001. So this was in 2003. Looking for jobs at pizzerias, they were paying minimum wage way less than what I was making in the early 1990s. So, I would argue that real wages have been stagnant and are actually falling. And I would say that we've already had actual deflation in wages, which I anecdotally experienced firsthand. So in a deflationary environment, I don't think wages are going down. So that's the point I wanted to make on that.
Yeah. Well, I do agree with you on that one. And so if that being the case, everybody, let's get ready to wind it down. So it looks like officially an hour on the dot. And so if that being the case, it's been great hanging out this afternoon. And so we have a FOMC unveil or reveal in the next 2 hours, give or take. We're going to find out how much they're going to be dropping. Therefore, the more they drop, the more of a threat it is upon your conventional financial matters. So definitely, this is a time to get your weight up as best you can. And so right now, this is probably as cheap as it's going to get, whatever the prices are at this current point. So take advantage of it, and you have in my opinion, you have a right to redeem those paper notes because that's how they was advertised to the people 100 plus years ago. So take advantage of that opportunity. But that being the case, Paul, any last thoughts you want to leave us with before we sign off for this afternoon?
Yeah, this is going to be one heck of a conference at 2:30, right? Powell takes the conference at 2:30 because of what's going on in the repo market. So he's going to have, and this is something that's just happened over the last 2 days. So they haven't had a lot of time to carefully prepare what his words are going to be in anticipation of these questions. Yeah. So if there was ever a time for a policy mistake, remember on Monday, I said there's 4 things that are saying that we're right to start rallying again as early as this week. And now with what's happening in the repo rate, Powell really does have a chance to stick his foot in his mouth today at 2:30. So it's going to be interesting to the rest of the week. I'm excited, and we'll see what happens.
Yes. Keep an eye out, everybody. Other than that, as always, if you guys have enjoyed the video and just hanging out with us this afternoon, don't be afraid to donate a thumbs up beneath this video here. And then if you want to take it above and beyond that, don't be afraid to share this video with family and friends so they'll find out what's going on and just begin asking questions. It starts with asking the right questions. And so information won't necessarily come to you unless you present it to them. And it's going to have to be something outside of the mainstream narrative because, as I mentioned during the stream, be leery on advice from people from reading teleprompters. So those people they have a job to do, and it's not to give you the truth. So with that being the case, that's all she wrote for this afternoon. Be blessed, be safe, and we'll see you guys later. All right.